The potential collapse of Silicon Valley Bank has sent shockwaves throughout the financial industry, with experts warning that numerous other banks are on the brink of bankruptcy. Hello, and welcome to this video on the alarming news of the SVB collapse and the possibility of other banks going bankrupt. Many people are worried about the viability of the banking sector following the recent bankruptcy of Silvergate Bank, particularly in the fintech sector. In this video, we'll look at the factors that led to SVB's demise as well as the dangers that other banks face from going bankrupt. We'll also go over the other actions banks can take to lessen these risks and guarantee the stability of the banking industry. So, without further ado, let's dive in. Section 1. SVB collapse. Since its establishment in 1983, Silicon Valley Bank has grown to become one of the top banks in the country with a focus on serving technology and life science businesses. The bank did, however, fall in 2022, shocking the financial community. A number of things contributed to SVB's demise, including a faulty business plan, risky lending practices, and an excessive reliance on the fintech sector. The foundation of SVB's business strategy was lending money to startup businesses with a high risk/reward potential. This business strategy was dangerous, though, and the bank neglected to diversify its holdings. The bank also lacked appropriate due diligence on its clients and engaged in reckless lending practices. The bank was consequently left with a sizable amount of non-performing loans, which put pressure on its finances. SVB's over-reliance on the fintech sector was another cause in the company's demise. The fintech sector was a high-risk one, and the bank was heavily exposed to it. SVB was severely impacted when the fintech bubble burst and had a difficult time bouncing back. Bank was compelled to declare bankruptcy as a result of SVB's collapse. This had a big effect on the banking industry and the overall economy. The failure of SVB had an impact on numerous other banks, particularly those with a fintech focus. The necessity of risk management in the banking industry has been brought to light by the collapse of SVB. Without taking action to reduce their risks, banks run the possibility of going bankrupt, which could have profound effects on the overall economy. It is crucial that both banks and regulators take a proactive approach to minimizing their risks. Section 2. Causes behind SVB collapse. A number of events that contributed to the bank's demise led to the collapse of SVB. The poor business model of SVB was one of the key contributors. The bank's business strategy was to lend money to risky startups with the potential for big profits. This business strategy was dangerous, though, and the bank neglected to diversify its holdings. As a result, the bank was unable to continue operating when the market conditions changed and the fintech sector experienced a downturn. The risky lending practices of SVB were another element that led to its demise. The bank made loans to high-risk startups without adequately evaluating the risk because it did not do adequate due diligence on its borrowers. This led to a considerable increase in non-performing loans, which severely strained the bank's resources. Another important reason for SVB's demise was its overall reliance on the fintech sector. The fintech sector was a high-risk one, and the bank was heavily exposed to it. SVB was severely impacted when the fintech bubble burst and had a difficult time bouncing back. The management of the bank also led to SVB's demise. A group of executives who lacked the knowledge and experience needed to successfully run a bank ran the institution. They were unable to guide the bank through its difficulties and the shifting market conditions. In conclusion, a number of reasons, including a defective business strategy, reckless lending practices, and excessive reliance on the fintech sector and subpar leadership, contributed to the demise of SVB. These elements demonstrate how crucial risk management, diversification, and knowledgeable leadership are in the banking industry. Banks that do not take action to reduce their risks run the risk of going out of business. Thus, it is critical for banks to adopt a long-term perspective and make sure their business model is robust and sustainable. Section 3. Other banks at risk. The failure of SVB has caused people to wonder how other banks operating in the fintech sector are doing financially. Experts warn that numerous other banks are at risk of bankruptcy, and the following are some of the banks that are considered to be at the greatest risk. Number 1. Deutsche Bank. One of the biggest banks in Europe, Deutsche Bank has experienced financial losses, legal issues, and regulatory sanctions. The bank's capital situation has deteriorated, and its share price has fallen, raising questions about the bank's ability to withstand a financial crisis. Number 2. HSBC. Although HSBC is one of the biggest banks in the world, it has been dealing with a number of difficulties, such as significant money laundering scandal, regulatory fines, and a drop in profitability. Although the bank has been reforming its activities to strengthen its financial position, it is nevertheless susceptible to dangers such as economic downturns. Number 3. Wells Fargo. One of the biggest banks in the U.S., Wells Fargo has endured a string of scandals, including the creation of millions of fictitious accounts, questionable mortgage lending, and a recent data breach. These scandals have hurt the bank's reputation and financial standing, costing billions of dollars in fines and settlements. Number 4. Bank of America. One of the biggest banks in the U.S., Bank of America has been having trouble due to a shrinking market share, low interest rates, and regulatory issues. Although the bank has been reducing expenses and reforming its business operations to strengthen its financial position, it is nevertheless susceptible to risks such as economic shocks. Number 5. Commerzbank. German bank Commerzbank has been experiencing difficulties due to decreased profitability, low interest rates, and regulatory issues. Although the bank has been reducing expenses and reforming its business operations to strengthen its financial position, it is nevertheless susceptible to risks such as economic shocks. These are just a few of the banks that are considered to be at risk of bankruptcy or financial instability. Even while some of these institutions have taken measures to strengthen their financial standing, they are nonetheless susceptible to the dangers and difficulties that the banking industry faces. As a result, it's critical for investors and customers to be informed about the stability and financial health of their banks, and to take the necessary precautions to safeguard their cash and interests. Section 4. Steps to mitigate risk. Banks must take action to reduce the risks they face in order to avoid the same fate as SVB. Diversifying their company models is one of the most crucial actions they can do. Banks are more susceptible to shocks and market downturns when they are excessively dependent on a particular sector or market. Banks can spread the risks and shield themselves from the effects of any one market or industry by diversifying their business methods. Another significant action that banks might take is to exercise greater caution when making loans to companies operating in high-risk sectors. Due to the volatility of cryptocurrency and fintech markets, banks need to exercise extra caution when making substantial loans to these companies. Banks can lower their risk exposure and safeguard their financial position by exercising greater caution. Thank you for tuning into this informative video on the potential collapse of the Silicon Valley Bank and the associated risks faced by other financial institutions. We hope that this discussion has deepened your understanding of these risks and highlighted the crucial steps that banks can take to mitigate them. If you found this video enlightening, we kindly request that you give it a thumbs up and share it with your friends and colleagues. Be sure to subscribe to our channel as well to stay up to date on the latest news and trends in the financial industry. If you have any questions or comments, please feel free to leave them in the comment section below, and we will do our best to respond to them. Once again, thank you for watching, and we look forward to seeing you in our next video.